Hi, this is Zak Mir from masterinvestor.co.uk with a look at some bulletin board hero stocks on Tuesday, the 10th of February. I'm starting off with Asia Resource Minerals, where you can see that there's been a gap to the upside to start the week. That clears the old January 16.9 pence high, and the ideal scenario is that there's no end of day close back below that resistance ahead of a retest of the initial resistance of last month, just above 30 pence. You can see there's also a rising trend channel that can be drawn from mid-November that heads towards 37, 38 pence, and that's the best case scenario target over the next 1 to 2 months. This stage really only back below the 50-day moving average shown here in blue, and this November support line around the 12 pence level would really turn this stock into a bearish situation, or imply that the breakdown that we've been seeing over the course of the autumn was set to continue again. Next up is a stock which has been rising quite frantically over the last couple of sessions. Decent technical buy signal here in terms of the unfilled gap to the upside through the 50-day moving average shown here in blue at 1.95 pence. And also it's interesting the way that the shares managed to push through post-October resistance at 1.85 pence as if it wasn't there. So very, very strong price action there. The view at the moment is that even though we've risen a lot in a very short space of time, the shares are going to move to fill this gap towards the 4.5 pence level, and possibly even stretch as high as this top of this rising trend channel from September at 6 pence over the next 1 to 2 months. If you're cautious on the shares and think they've risen too far too fast, maybe you buy towards the floor of this gap in the 3 pence zone, and allowing the shares to cool off from their overbought RSI currently at 81. Next up is Plutus Power Gen, which we've been following over the last few weeks. Shares have risen very nicely. They always looked as though they were in a sort of a constructive pattern here. The rising 50-day moving average shown here in blue, and the way that you could draw a rising trend channel from November through these support points just below the 50-day line now at 0.75 pence. The view now is that we've got this bullish consolidation just above the 1 pence level, which was the former resistance to start January. While we hold above 1 pence, really the upside here seen as being at the top of this November channel as high as 1.6 pence over the next 2 to 3 weeks. Any weakness in the meantime to test the old resistance as new support would be regarded as a buying opportunity. Probably the best stop at this stage, an end of day close back below the 10-day average, 0.89 pence shown here in green. Another share which has been flying of late is Sareum, looking encouraging in terms of the break above the 200-day moving average here in black at 0.46 pence. Such breaks are normally quite significant trend-changing events. The way I see it here, we've got a broadening triangle here from the end of 2013, and that marks the best case scenario for the stock over the next 6 to 8 weeks, let's say. Any weakness towards the 200-day line currently regarded as a buying opportunity. Only back below the 50-day average at 0.38 pence, outright negative at the moment as we head towards the hoped for target as high as 1 pence over the next few weeks and months. Finishing off with a stock which has been punished quite hard by the market in the recent past. That's Savannah Resources. You can see the meltdown from the initial 2014 2014 peaks, failures at the 200-day moving average, but it looks as though we've got support coming in at this falling trend channel towards the 2 pence zone, or just below it. If you're cautious on the shares, maybe to wait for an end of day close back above the 20-day moving average of 2.18 pence, but it does look as though enough work has been done, at least for an intermediate rally here, which would take the shares back towards the last January resistance at 2.5 pence. Breaking that would really turn the shares around and probably give them a chance of revisiting some of the better levels that we saw towards the end of last year. At this stage, really only back below, well below the 2 pence level, now regarded as outright negative. Yesterday's low 1.77 pence, a decent stop loss on the bull argument at the moment. That's it from me. More updates at masterinvestor.co.uk.